Global Partnerships team. She works on developing insurance solutions for public sector entities to help them recover from natural catastrophes.
Thank you, Andy. Thank you to Monmouth University. Is there a trick to getting this? There it is. Okay. So as Andy said, I work for Swiss Re. I work in our Global Partnerships team, which was formerly known as our public sector team. I work on helping governments address their natural catastrophe risk, so I think it's a very relevant topic for today. If we look at a comparison of economic and insured losses between 1980 and 2012, now these are global, these include also seismic events, so earthquakes, tsunamis, etc. There's a couple of features that you can pick out of this graph. Number one is that even when you adjust the value of the dollar, the magnitude of the loss is increasing year over year pretty much with some interannual variability. The other thing you notice is that if you look at the blue, which is insured loss, and the green, which is uninsured loss, the gap between insured and uninsured losses is increasing. And this falls onto the back of the public sector. Now, fortunately, Swiss Re and other companies that work in the reinsurance and insurance industry, we're looking for ways for public entities, private entities, and individual citizens to understand their risk, mitigate their risk, and adapt to their risk. These are 4 ways that we do this. Modeling expertise. We do a lot of internal research. I'm going to briefly touch on one of the aspects that we work on, which we call the economics of climate adaptation. Go over that methodology briefly. We come up with innovative alternative risk transfer solutions. As the climate changes, as the risk landscape changes, as the value of infrastructure grows, and as the economy becomes more and more globalized, other areas that had previously not been insured will need insurance. And we're coming up with solutions to insure them, even if there's not acceptable claim data to build an insurance analysis from, even if there's not acceptable hazard data. So we're coming up with solutions. And the last thing is that we do a lot of education and we do a lot of consultation services as well to help our clients, to help our stakeholders, and to help the public really understand the risk that is faced from natural disasters. First, our modeling expertise. Admiral Allen mentioned earlier that it's difficult to assess natural hazard risk. And he is correct, and we have come up with a way to do that. What we do is we combine scientific, engineering, financial, and insurance principles so that we truly understand what is the possible economic loss to a portfolio. And a portfolio could be anything from a primary insurer's residential portfolio to a municipality coming to us and saying, here's our infrastructure portfolio, can you please tell us what the maximum loss is to that and what the entire distribution of loss looks like. We also take this approach and apply it to climate change scenarios. The best example of that we have is a case study with the City of New York. In December 2012, the mayor launched the Special Initiative on Rebuilding and Resilience in New York to develop a comprehensive plan to help protect the City of New York from future storms. So what we did in conjunction with McKinsey & Company is we assessed the damage using current climate scenarios. And then what we did was we applied climate change scenarios to our models that I talked with in the previous slide to come up with what is the economic loss potential in the future. And then the third component of that is to take different adaptation and mitigation efforts and apply them to those climate change scenarios and see how is the cost reduced. So the overall product of this particular study was that it allowed the city to assess the cost benefit of different adaptation and mitigation methods, and also get a real sense as to what their actual monetary value of their potential economic losses, which is critical for land use planning, it's critical for infrastructure planning, and it's critical for budgetary planning. The next thing that we do is, like I said, we develop innovative risk transfer solutions. My team within my company has been around for about 10 years, and we've recently grown in the last 5. And we're really trying to help governments utilize new insurance products so that they can be protected against natural disasters. We typically use, with governments, not traditional traditional insurance policies, which are settled based on claims assessment. You go, you get into a car accident, you take your car to a claim adjuster, you get $1 of money back for $1 of loss. What we do is use something called parametric insurance. And parametric insurance is also known as index-based insurance. And this typically settles on the characteristic of the event itself, not on the actual value of the loss. And the benefits to this is that the proceeds can be used to cover whatever the client wants. It can be used to cover debris removal, immediate repairs, pay the salaries from state or local employees that had to work overtime. It can be settled very quickly. If it's an index, for example, we could say, let's say that a Category 3 hurricane or higher strikes Miami-Dade County. Miami-Dade County will get a payout. That's something that can be settled very quickly with data from the National Hurricane Center. Very transparent, as I just explained to you. It's relatively easy to explain to a client. And then we can adjust these based on the budget of the government, based on what they're looking for, based on their needs, and based on how much premium they're willing to pay. And here's an example of how one works. Like I already mentioned, but here's a visual. This is a bond that is in Mexico, which covers hurricane and earthquake. And in the particular case of the hurricane piece, there's one box on the Yucatan Peninsula, which covers Cancun and Cozumel, a very critical part of the Mexican tourism industry. So the government of Mexico said if there's a hurricane that has a central pressure of 920 millibars or lower that passes through this box, we would like to get a payout for immediate relief efforts so that we can get that area back on its feet and we can start regenerating the revenue that it brings in from tourism. The last thing is education and consultation services. Swiss Re has been involved in the climate change space for over 20 years. We have a very vested interest in it because we are in the business of risk management. We turned 150 years old this year, so we apparently do a fairly good job of managing our risk, and climate change is going to bring in new risks, and it's going to shift the landscape. So we're a founding sponsor of Climate Week New York City, which started in 2007 and has grown over the last several years. And that is actually where I saw the launch of the IPCC AR5. We released publications. Our most recent is our Mind the Risk report, which looked at the potential affected population and the lost economic productivity in 616 metropolitan areas. And what we found in this study is that the New York, New Jersey metro region ranked #1 in population that is potentially affected by storm surge. And finally, we partner with other NGOs, we partner with nonprofits to help educate and help our clients increase their resiliency to climate events and extreme weather events. One of the most recent announcements that we made was our commitment to the 100 Resilient City Challenge. And so in the next 3 years, we're going to support 100 cities globally to come up with a comprehensive resilience plan, which includes appointing a chief resilience officer, creating resilience strategies, and coming up with a knowledge center and a brain trust for managing information, sharing best practices, and other aspects of financial planning. Finally, we also have a mapping tool for our clients where they can just come in and they can see what their risks are. This is just an Internet Explorer or a Google Maps based map. It's very simple, but clients love it because it does a lot of different things. It shows your risk. This is hurricanes that have passed off the coast of the state of New Jersey. We provide real-time information regarding ongoing events. So this is a couple days old. It shows Hurricane Raymond off the Mexican coast and where it's going to head. We give post-event footprints so that clients can import their exposure and see if their risks were exposed to a given event. This is our Hurricane Sandy storm surge footprint, which was available almost immediately after the event. And finally, in the US, we have the flood insurance rate maps, but there is no flood mapping standard globally, and we developed that internally so that in areas that don't publish maps similar to FEMA, our clients who write business in that area can import their risks into our mapping tool and see, is it exposed to flood? Is it in the 100-year floodplain? Is it in the 500-year floodplain? And this shows an example of Calgary. Canada has no national flood maps that are produced by the government, but we produce them for Calgary, and this helped our clients underwrite their risks in the Calgary area, so they were better prepared for when the flood came in 2013. So I think that this panel has demonstrated so far that climate change and its impacts are going to require innovative, multidisciplinary approaches. Insurance is a vital component when you're trying to come up with a risk management solution to managing your climate change risk. It is of paramount importance to the insurance industry that we understand climate change. And academia, the public sector, and private citizens should really tap into the wealth of knowledge that we have in risk assessment, in risk mitigation, to better understand the hazards that they're exposed to and what they can do to offset some of their risk. Thank you.